We're joined by John Loos, property strategist at FNB Home Loans. John, thanks very much for taking the time to come to talk to us today. We've got those numbers coming out a little later, but let's just talk about your general expectations. We do know that the economy rebounded in the first quarter. We saw that growth coming in at 4.6%, but we do know that that growth was uneven. Zero in on the construction sector. What can we expect?
Well, I don't think during this year we're going to see much from the construction sector. If one just looks at the world I live in, predominantly the residential building activity, square meterage completed 42% down year on year in the first quarter of this year. I think we'll see more of the same in the second quarter as the months, each month's data comes out. There's still a lot of oversupplies in the residential market, and they still have to be mopped up. So the existing market has been improving, and activity has been picking up there, but there's still too many bargains and too many oversupplies that have to be mopped up. On the commercial side, we've seen in recent years vacancy rates rising, so we've also seen big drops in the first quarter. Office space, I think, was something like 56% year on year down in terms of square meterage, and the retail and industrial also down significantly. Those are a big part of construction, and then of course we've headed into the World Cup now. It is here, so one would expect on the civil side too some weakening, although a lot of the road construction and so on carries on, but one would some of the 2010 specific projects would have been wrapped up a couple of months ago, stadium projects and so on, so one would expect to see some weakness there. So unfortunately I think 2010 is set to still be a weak year from the construction side, and it's going to be other segments of the economy which would drive the recovery and growth.
Indeed, I was going to suggest that given the fact of what we are seeing on the ground, I mean, we're next door here to the How train station for Sandton, and you can see clearly from the outside the facade is not complete. The building still clearly shows that there is work to be done, and I was thinking there must surely be quite a lot of work that's still associated with the World Cup that still needs to be completed. No,
sure. Well, a lot of this is not World Cup related. The transport system projects do carry on for some years, I would guess, including the How train, but that doesn't necessarily bring growth in output. That can just perhaps sustain the output at current levels, prevent it from declining too much, but difficult in the second half of the year to see where we would grow to higher levels of production than what we've had in the first half of the year.
Yeah, the picture you paint is consistent, because some of the numbers that we've seen from the building construction companies, for instance, they've been talking about profit margins being under pressure because there is no longer the same amount of work that was available. In other words, they're being now forced to look at work that ordinarily they would not have been able to look at, say, maybe a year ago from where we are now. So the question then becomes, and it's a question that was asked before, what happens after the World Cup? Are we likely to see the same level of activity within construction than what we saw before the World Cup, indeed the lead up to the World Cup?
Well, Godfrey, as you've deduced from what I've said so far, I don't think so. Some of it's World Cup related. As I say, a small part of construction is World Cup related, specific stadium projects and specific World Cup projects which come to an end, so that has a dampening effect. Other civils projects would carry on, but still a weak time from a residential and commercial building point of view, which has really nothing to do with the World Cup. That's got to do more with the property cycle. And although the residential sector, which leads the commercial sector, has been recovering, it's still just too early to see pickup there due to the oversupplies that exist from the previous building boom. Those in some areas will take a couple of years to actually be mopped up. So that's the unfortunate situation, is it's a long, slow process back to health in those sectors.
Absolutely. If we look at some of the numbers that we saw, for instance, in the first quarter, the numbers from Stats SA showing the number of recorded building plans that were passed by the larger municipalities down 1.5%, and for the largest decrease there coming in the non-residential sector, and I think that's a point that you have pointed out. So what sort of numbers do you think we can expect in the numbers that are coming out today?
Well, I think that minus 1.9% refers to value of building plans passed, which doesn't make it look so bad, rand value, because there is an inflationary component to it. You know, I like to look, if you want to look at genuine building activity, I like to look more at square meters completed. Right. That's more a real indicator, and there we talked about 43% odd down year on year in the first quarter for for residential, commercial, the office space 56% down, if I remember, and the retail and construction were retail and industrial running at about 14% for the first quarter, year on year, down. Something in that line, and I do expect more of the same. Unfortunately, I think the first half statistics still going to be pretty dismal. On the residential side, we may have a leveling off. In other words, a lack of further decline in the second half of the year at best, because the residential sector leads the commercial sector. But on the commercial sector, I still think we've got some significant decline to go, because certainly the most the most recent data one has on commercial property, at that stage vacancy rates were still rising. So there is something of an oversupply in commercial space has been developed during the building boom.
Yeah, but on the prices themselves, we have seen a pickup certainly in prices. For instance, I think the last numbers that we saw coming, I think out of you guys, these are now ABSA numbers, and they were talking about the price for medium sized houses rising 9% from a year ago. Now that was in May, and the expectation that we've been getting out of guys like yourselves, economists, have been talking about a general pickup in prices. Do you expect that to be maintained for the rest of the year?
I think in the second half of the year we're going to start seeing a decline in the inflation rate. So in other words, prices carrying on increasing, but I think we're probably near the peak. Our price index runs at 11.9% year on year.
Okay.
I think we're a month or two away from that inflation peak, the price inflation peak, and thereafterwards slower price inflation. The reason being that we are starting to see signs of early signs of a global economic growth slowdown.
Right.
Our Reserve Bank leading indicator also perhaps points to a slowdown in growth in the second half of the year in our economy. Business confidence down slightly. So the economy slowing growth moderates residential demand slightly, demand growth slightly.
Sure.
And then obviously it's a very interest rate sensitive market, and we have a lack of interest rate stimulus at the moment. The big cuts being up to August last year, and then the one small cut in March. So that interest rate stimulus from last year will slowly start to complete its work, and then in the absence of any further major interest rate cutting, which we don't expect further major interest rate cutting, the stimulus would wear off and the market would then flatten out.
So even a small cut of another 50 basis points that some economists have been talking about potentially wouldn't make much of a difference.
No, 50 basis points on its own doesn't make a meaningful difference.
What about the message that it sends that the central bank wants to keep the cost of borrowing low? Surely wouldn't that perhaps get more people coming into the market and making them think long-term more about buying rather than waiting for prices to come further down?
Well, I'm not sure that a central bank should focus on keeping the cost of borrowing low or high. I think a central bank should worry about various imbalances in the economy, the levels of debt. We've got a debt to disposable income ratio in the household sector, which is at a cyclical high. I don't think we want it higher than that. We still run a current account deficit if one looks for the country as a whole, which means that your domestic expenditure is out of line with your national income, and that means your foreign debt foreign obligations are gradually rising. So the Reserve Bank has to look at those imbalances, and we as a country need to cut our coat according to our cloth. So I'm not altogether concerned with where interest rates are at the moment. I wouldn't think, unless we went into a double dip recession, which is not out of the question, but unless we went into that, I wouldn't think that it's necessary to take interest rates any lower. They've given the people with debt significant relief, but we don't want to fuel borrowing growth as a country from here onwards for a while, until the debt ratio has actually dropped somewhat.
We don't want to end up like Greece in short.
We don't want to end up like that.